Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from GeojitFinancialServices. As then I speak to all of you all this Monday morning at around about 10:30. We've seen an initial sell-off in the market, and from the lower side we have managed to recover quite a bit. Before I go any further, let me give you certain levels on Sensex, Spot Nifty and Nifty Bank, Rupee Dollar and Crude Oil. Sensex down about 300 odd points, 77,060 is the level on Sensex. Nifty is down about 100 odd points, 23,325 is the level on Nifty Spot. Bank Nifty down 140 points, 48,570 is the level on Nifty Bank or Bank Nifty. On Rupee Dollar and Crude Oil now, this is where the large part of the problem is. Rupee is at its historical or lifetime lows. 86.36 is the level on rupee against the dollar, with a weakness of about 0.40 paise, that is 40 paise, and a huge bump up in crude oil post the news flows from US about sanctions on Russian crude. $81 to a barrel is Brent and $78 to a barrel is NYMEX. This is where the large part of the problem lies for an economy like India. We have been hit by from both sides, weak rupee against the dollar and rising crude oil prices. First view on crude oil prices and rupee dollar. Well, rupee is likely to see more weakness against the dollar, and that has been exhibited by dollar against major currencies, emerging market and developed markets. Dollar is stronger against almost all currencies, be it emerging market, be it Indian rupee, or be it any other developed currency. And this strength is likely to even strengthen further in dollar. That may lead to more weakness in emerging market currencies as well as India. We could possibly go as weak as 86.50, 86.75. This is the view on the street of rupee dollar. So we have to prepare ourselves to see more weakness on rupee against the dollar. On crude oil front, well, we had one situation on hand in terms of Middle East, and now we have sanctions on Russian crude from US, and that led to a huge bump up of almost more than $1.25 on both Brent and NYMEX, and this is likely to have a more upside impact on crude oil prices. So commodity wise, we expect crude oil also to be at an elevated level this week, and weakness in rupee against the dollar. Now coming to the stock markets. Well, after breaching the lows that we've seen in November, this morning we breached those levels. We've seen some kind of buying coming back into the market, but the issue is the events and the news flows and the levels on the Sensex and Nifty, and more importantly certain large cap stocks as well. First of all, as we go into this week, we are preparing ourselves for the swearing-in ceremony of President-elect Mr. Trump, and assuming the Oval Office and laying down the policies. This will have its impact definitely on the markets across the globe, including India. We have Q3 earnings unfolding thick and thin. It started last week, and then possibly we'll see large earnings coming in this week, and followed by a couple of weeks after this. So maybe some amount of directional sense could be seen in the markets with respect to the earnings season, but more importantly for us is what the Sensex and Nifty does, and possibly there will be choppiness and volatility, and that choppiness and volatility is also going to be at an elevated level, since India VIX currently is at about 15.83 with a jump of almost about 6%, and as much as jump in the India VIX, as much as volatility is what we are likely to see. Range for Nifty, friends, 23,000 and 23,200 on the lower side. On higher side, 23,400 to 23,500 is the broad range that we have kept as of now in mind. And the reason to give this kind of broad range is the volatility and of course the spike in the India VIX. Defense, budget. As we go closer to budget, we are going to see a lot of expectation and hopes that are going to be built up, and we overall there is a sense in the market that this time around Government of India, Ministry of Finance and the Honorable Finance Minister Srimati Nirmala Sitharamanji will have to do a little bit more than what has been done in the past couple of years. First, to push consumption and of course in certain sectors budgetary allocation. So what are going to be those certain sectors where we feel there are going to be large allocations coming in? Defense, infra and power. These are the three themes that we are looking forward to in terms of budgetary allocation. And to push the consumption to the next level, I think some amount of changes at personal tax level is something that we expect, and of course other policies which will enable the growth to continue and FDI flows to come into India. 3 months high as far as crude oil prices are concerned is something to worry, and the large part is because we are a nation, more than 75-80% we import of our energy requirement, and when you have two sword cuts coming through, higher crude oil prices and weak currency, that is INR against the dollar, the situation becomes a little bit more tricky to handle, and possibly impact on markets and economy could be witnessed in the immediate short to medium term. FIs have been selling and they continue to be on the sell side. On the flip side, the domestic institutions continue to be on the buy side. Even last week on Friday, FI sold quite a large amount, and on the flip side, the domestic institutions bought a little bit more than what the FI sold. So I think this, unless and until there is a sizable amount of pause on FI selling, we are going to witness these kind of days as we go into this week as well as into the future. Broadly speaking, I think if you are a trader, if you are a short-term, medium-term investor, I think you have to first of all scale down your hopes in terms of your profit margins and keep your stop losses in place, because this market is going to throw a lot of volatility as such. And my humble request is, don't take any one-side position. Hedge your position in this kind of a market is what I would advise from an immediate short to medium-term point of view. Don't take one-side trades. And if you are an investor, then I think rather than timing the market and finding the right price for your stock to get invested in, make a beginning. Take that step forward, make a beginning. Don't put all your money at one time. Yes, we have corrected more than 10%. Last 1 month has been very, very tricky and choppy to handle. And these times are possibly going to last for some more time is what we anticipate. So instead of trying to time the market and trying to find the right price for your stock investment, start putting in money in very small bits and parts. 25, 20, 25, 30%. If you have a low risk appetite, if you have a high risk appetite, you can possibly increase it to 35, 40%. And as and when the market gives you opportunity to add on to that stock at lower level, I think you should take that opportunity and commit yourself towards your investment philosophy and theme and confidence as we go forward. Friends, as we mentioned in our business market outlook for 2025, this year is going to be a little bit difficult. Policies are going to be something that will possibly add to the sentiments in terms of budget, and of course other policies from the government of India and the kind of news flows from the overseas market. So scaling down of expectation in terms of index for 2025, stock specific, if you have the capability of identifying those opportunities, then definitely you will end up making a little bit more than what Sensex and Nifty will deliver in calendar year 2025. And of course, if the geopolitical situation, inflation, interest rate cuts, if there are some good news over here, then I think we should see not only our markets improve a little bit more, but global markets also should improve a little bit more. In this kind of a scenario, our sense is that it is more important to look at large cap stocks rather than going into small cap, micro cap, or even mid cap as a matter of fact. And the reason to identify large cap themes is that there is comfort in terms of valuation now. The downside looks protected because most of these large cap top stocks which contribute to Sensex and Nifty have corrected. So the first investment theme on the fundamental side from long term point of view is Reliance Industries. Excuse me. I believe Reliance Industries will announce its numbers this week. The price correction and of course the underperformance is there in the price right now. Risk reward looks extremely favorable from long term point of view. So start at current levels and on dips go on adding it. The second investment theme is from IT pack. We've seen TCS numbers. This week we are going to see Infosys, HCL Tech, Wipro come out with numbers, L&T Technologies, and likewise other IT companies. HCL Tech, we believe, is one of the large cap stock which has continued its outperformance quarter on quarter, and we expect that after looking at the numbers of TCS, we expect by and large IT sector to deliver a decent sum of earnings, and wherein you will see performers like HCL Tech may tend to outperform. Since numbers are going to be coming out this week, it's going to be difficult to put any number as far as the third quarter earnings is concerned, but we expect it to do better. So the second investment idea on the fundamental side is HCL Technologies. Start accumulating at these levels and on dips go on adding to it, but be very clear that these are fundamental long-term investment ideas. These are not BTST or short to medium term investment ideas. Hope that market stabilizes and we see a sign of relief, and more importantly, India VIX should cool off for that. Thank you very much for your patience hearing. I'll see you again next week. Till then, please do take care of yourself. Bye-bye.